Hey there everyone, happy Wednesday, the second to last trading day of the week before a 3-day weekend where the US stock market is closed. Keep in mind, crypto never sleeps, by the way. I will cover Bitcoin in this video along with XRP, but I will also give commentary on what's going on with Nvidia and the trade restrictions that they have going on with their H20s that now they can't send out right away. So now they have 5.5 billion that they just got to hold back on. And that's really going to affect their growth numbers and also throw some uncertainty into them. So what exactly could come their way with their stock price? We're going to talk about that in this video. And we'll also talk about QQQ, SPY, and IWM as they track major indices of the NASDAQ 100, the S&P 500, and the Russell 2000, respectively. By the way, if you guys want to see my technicals, more of my commentary, my buys and sells, along with the other panel experts' commentary, buys and sells, and interact with us over at the Discord. We have a joint Discord together, and you guys can be a part of that by using the link down in the description. Make sure you sign up for the earner tier so you get unrestricted access, not only to talk to the panel experts, but then also we have the bread bot over there, which is used for a trading strategy. You guys can learn more about that. Later in this video, I'll tell you a little bit more about that. We also have advanced charting, AI features as well, a community of thousands of members, a strong, positive community that's just there helping each other support their way towards financial freedom. So without further ado, guys, let's get into the charts on this thing and talk about what we're seeing. So the very first thing is Nvidia. So man, when we look at this chart, the peak that we got to is just over 150. So if we go to the high price during regular trading hours, that was 153, currently trading down at about 105, down from the close of about 112. So about 6 to 8% or so down from yesterday's close, given that news that we heard that there are further trade restrictions with China on their H20 parts that they were able to sell in the first place, but now the U.S. government was like, nah, let's have you get some new licensing and stuff for that. So Nvidia's like, well, what are we supposed to do then? So now, mind you, it is close to the end of their April quarter. And so that means that it could potentially go more against their July quarter. We're going to have to watch and see if that's exactly what takes place. But that is going to mess up their growth trajectory and their growth numbers, something that was already a bit in question, at least as per the market and the demand that we saw. I talked before about two-digit Nvidia, how I'd be excited for it. We actually came down to about $85 per share before coming up to a more recent peak there. The regular market hours up to about 115. So that $30 climb that you would have seen would be like a 30 to 40% jump from the bottom of that thing. And I don't think that Nvidia's one to stop doing that. And once again, you can actually pretty much see that demand area coming in where we saw this chop before for Nvidia right around. Again, it goes about $85 up to about $95, $97. And you can see where we find those bottoms from August the 5th and more recently when the market bottomed out on April the 7th. Now, mind you, this could push us back down into that area. And it depends on a lot of things. I think the broader market would also have to speak to a sell-off like that one, just like what we saw before. And I mentioned that before with Nvidia. I said overall market pressures are going to be something that as trading multiples compress, Nvidia's are just going to compress right along with it. We have to expect it. We have to be ready for it. But we know that Nvidia is a rock star of a company. I think that they're going to find their way to navigate through this. And I think we're going to find a release of that downward pressure, even though it's going to be temporary. I do think that this is big enough news that especially if we continue to see further tariff wars, further escalation between the US and China, compounded with what we have right now with Nvidia parts being sent over to China or not being sent over to China with what's going on with the U.S. government right now, that could have us back down that two-digit figure. I think we could see a little bit more of a give up than what we're seeing right now, but I'll absolutely take advantage of some cheaper Nvidia, being that I'm a long-term investor and I don't mind doing some dollar cost averaging and looking at the long view for Nvidia. And I've talked before in my videos that I really do think that AI is just something that we're learning how to use. And as we get through this geopolitical rough patch and we make adjustments and really start to carry forward with that, I think the build out, the further demand for Nvidia parts and services is going to continue to expand over the next several years, at least as we start to really hit full commercial ramp of Nvidia, I should say of AI services, products, you name it. And Nvidia is still a very key infrastructure player in that. So for Nvidia temporarily, I think we could see it back down in the two digits. But I do also think that it definitely depends on what we see broader, not only market-wise, but also geopolitically with what we see with inflation as well, or tariff-driven news, I should say, is just going to keep on just bucking these markets around. And as we get good news, yay, and we cheer, the market goes up. And as we get bad news, oh, the market falls. And that drama is just going to keep on messing with the markets in the meantime. So it's going to be a really whippy time to be in the markets. So let's go over to the Qs, take a look at where we're at, because I talked in my previous videos about getting rejected off the 20-day. It happened. We didn't quite get there during regular trading hours yesterday, but we did get a candle that signals it could sell lower. Today it is so far. I did also talk about the exponential moving averages. So if I put those up there, we are still above the 5 and the 13. This is a near-term bullish thing, but without other supporting evidence at the moment, such as right now the volume is fairly subdued. We also, when you look down here at the RSI all the way at the bottom, I'll help you out. It's down below 50. So currently bearish momentum, and we have just very subdued volume at the moment. What we want to see is a 513 cross in the near term. So this green coming up across the yellow, along with a big move in volume support. Both those things could really help us out. If we get a big move without the volume support, that could show a lot less conviction and in the markets. And it could mean that it's not really a move that's going to stick around for us. So it is something that we have to watch for, such as this movement that we had right here was, even though it was a decent move up, it didn't really have the volume support to go along with it. Now we're trading back down. So if we go over to the SPY, SPY tracking the S&P 500, there we go, zoom that out for you. Didn't make it up to the 20-day. As we look at this, still didn't fill this gap. I left this over here for you. QQQ absolutely did fill both gaps, going back to Wednesday, April the 9th, when we had the Qs move up. We almost got there. We got about halfway through it for SPY when we look at this chart. And once again, there's that low volume jump that we had, followed by not quite crossing the 20. We have to get over the 20. Why it's so important? Keep on talking about it, because if we're looking for further upside in the markets, I think that's one of the nearest indicators that we have is that 20-day, which is currently down below the 50 and the 200. 50 is crossing down below the 200. We're absolutely, at least on a daily basis, in bear territory for things. So we should have these rapid climbs followed by potentially further sustained falls. But keep in mind, when we look outside the market, when we look at the broader market implications or the broader market factors, if you will, things that are making the market move this way, the tariffs are still in the forefront. There's still that big news, and it's the uncertainty part of it. And maybe there's some fear, maybe there's some doubt, but definitely the uncertainty part of things just keeps the market just moving in wild ways. And so it makes it hard to say if we have a single direction, if we have that monotonic behavior, if you will, where we see that we're going to go generally up or generally down. Right now, I think it's still going to be very choppy, and we are absolutely still in that area of chop that we see back here, where we had that peak and then back down, a further peak back down. Anywhere in here could be that area until we make a decisive move. I talked before about the 23.6, how important that was. That could be a temporary bottom, and so far it was. The next one down below that, and I think it would really take some confirmation that something was broken or that something like Black Swanny was happening, is the 38.2, which is all the way down at about 408. So by that point in time, I think that would be that next max pain level. I wouldn't be surprised to have us even revisit the 23.6 before bouncing again, making a double bottom, and hopefully setting us up for something real, magical, and special that doesn't just give us this temporary relief, but gives us this overall relief where we start to see that next leg of the bull run. I just think right now there's too much going on, too much drama in order for that to take place. We would really need something strong coming out of corporate earnings. And I think even those companies, as they report their earnings, are going to be reporting a lot of uncertainty as well. And that's not going to help the market move up to those higher highs. It'll either keep it chopping or it could even add some downward pressure to it. But I don't think we're at that alleviation moment. I think we're more at a reset moment. And this is the first part of it, in my opinion, coming all the way down. And this is the weekly chart that we're looking at, coming down to the 23.6 is the first part of that reset. If we make another leg down and it still happens to be, let me go actually back to the Q so I can just show this to you really quick. I believe that I have this up here for you. There we go. This is what I said about this. I talked about it, as a matter of fact, months ago, I'm pretty sure, the 38.2 being that place where we could come down with continuing evidence. So not just fears from inflation and tariffs and recession, but actually evidence of inflation reoccurring on us, which we don't currently have right now from the reports that we have. Recessionary fears with continuing evidence, and also, like, do tariffs lead us there? Is it something with a tariff impotence that I should even add to this in light of new information? Let me put a comma, and let's put tariff war escalation. So the combination of these, I think, is what would bring us down to the 38.2. And I know people are going to hit me up in the comments because they do from time to time. And they're like, we're not going to sell down to that level. I definitely am not saying that we're going to. I'm saying that this is what it would take in order to get down to this level. So if you see inflation or recessionary fears with continuing evidence that we are headed in the direction of high inflation plus recession, which the two should eventually cancel each other out because it's hard to inflate prices when people can't pay them. And then also tariff war escalation, that things go further south because of the tariff wars that we're in. That's what I think it would take. It wouldn't take anything minor to get down there. It would actually take some very major things to get down there. I talked before about hitting the 23.6 and the opportunity that comes from those sort of lows. And even as of right now, from where were we at here when we hit all the way down at that low round around 409, which happened to be that previous peak, which is fairly coincidental with the 417 that we have here. We're still about 10% up from that in very quick short amount of time. So I think if we look more broadly at what we're facing right now, we could have already hit the bottom. We could be on the way back up. We want to see some subsiding with inflation, which we sort of have at least in the near term. We'll see if that keeps going. We want tariffs to de-escalate. We want those to smooth out. You already saw what can happen as we start to get good news on tariffs. Now we need that recession part to just melt away on us. And if that happens, if we show economic strength instead, and we show that we have more polishing to those 4 pillars that I talk about in my videos, that can be that strength coming back to it. So let's go over to IWM. And you can see down below the 200, the 50, the 20-day, we're just up above the green. I think long term, I think that is where we're really going to catch our stride. I said that we visit down here below the green line on this monthly chart for IWM, the Russell 2000 stocks, but we really live between the green and the red, and it tends to die up above the red, even if it does take some time. And if you look at the circumstances surrounding each one of these peaks, they are temporary things that add to some euphoria. So this is really the euphoria zone up above the red line and peak fear zone down below the green line. And this has gone on for 17 years as we look at this bull run in the Russell 2000 stocks, at least in an overall sense that we're in that bull channel. So let's move over to Bitcoin. Bitcoin, we had 4 days fighting the 50 period exponential moving average. Yesterday, it looked like potentially we could get there. Still haven't. We are trading up above the 5 and the 13. These are exponential moving averages that we're looking at. We do need to get up on top that 50. If we get a candle up above that, the RSI is looking nice and ripe at 51. We need some volume conviction. We haven't really had it since you go back to, once again, April the 9th. The next move that we had up, the next big one on April 11th, we had half decent volume, but not really igniting volume, if you will, and it's tapered off since then. So we want to move up above the 50 on a volume supported move. The RSI, like I said, it's ripe. Even if we go out to a weekly basis, for Bitcoin, we're at 48.99. So we are just at the point that if we can just make it up over that next little hump on the 50-day exponential moving average, which seems to be where we're resisting, where we're getting rejected, if we can show that as support as well with volume support, that could be very good things for Bitcoin. XRP, just seeing that same weakness right now, right along with Bitcoin. So this is the daily chart that we're looking at. We got one rejection off the 50 EMA, still surviving just up above the 5 and 13, the RSI dropping down below 50. We could see a little bit more price weakness, but we're still in that area of chop that goes down to about mid 190s, if you will, $1.95-ish is about where we've seen, and we see a lot of buying pressure coming as soon as we drop down below $2. Buying pressure just keeps on coming back in and sending us right back up. We do need a higher high to be put in, and we broke a minor high, if you will, on April the 2nd when you fast forward to April the 13th, but we really want to overtake this peak that we saw that put us up above $2.50. We want to go up to $2.60 or more, and we also want to stop putting in these lower lows. Lower low, and so on. As soon as we get a higher high, and especially hopefully a higher low, that can really help us out, seeing that we're starting to change direction for XRP. Once again, waiting for that catalyst, waiting for that igniting volume. And like I said, you guys can see more of my analyses over at the Discord, along with the other panel experts that are over there sharing our ideas. People who focus specifically on crypto, specifically on stocks, specifically on bonds. I tend to do more of a whole market look. I'm kind of like every single part of it. I'm very nerdy about that. That's why I touch my glasses the way that I do, that whole nerd look thing. And I'll tell you what, it is the best community that I've ever been part of. And the products and services are seemingly endless that you can spend all day in there just getting different trade ideas and looking back at the markets and people sharing their ideas, sharing their thoughts, and helping support you through any market conditions, whether it's the ones that are those very awesome bull runs where everybody's celebrating, or it's the ones where you see those big sells and you learn how to capitalize on those sell type moments when the market's heading down. We're still making cash. The trade wins coming out all the time. You can see that in Trade Wins channel as well. The link's in the description waiting for you for just what equates to just over $1 a day for that Discord access through the earner tier. That gets you access to everything that the Discord has to offer. And if you guys want to learn to do technical analysis yourself, if you want to learn how to get access to the how to learn the bread recipe trading strategy like I use, developed by Stockmo, I'll tell you what, clean, easy, simple to set up, and just absolutely wonderful. The Discord has the bread bot that can help show you when those buy or sell moments come in. Even though it won't tell you to buy or sell, it does say that some major movement's about to happen, and even indicates the direction, whether it's a bullish movement or a bearish movement. You can double check your work with the bread bot and see if you're seeing the same thing that the bread bot is seeing, and then you can just watch what happens. I'll tell you what the accuracy on it. It's a very well back-tested and time-tested strategy, and I really stand by it. Also, options. I use options a lot in my trading to add alpha to my portfolio, and if you guys want to learn how to do the same thing, all that, the technical analysis, trading using technicals through the bread recipe, and the options course all together through Stockmo Academy. That link is also in the description. You bundle the courses to save some cash. Use code word doctor to save even more cash when you sign up for those courses. And guys, otherwise, I'll either see you back here on YouTube, or even more, hopefully I'll see you over at the Discord where we can interact with each other. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.